Hi everyone, welcome back to Wall Street Wizard. In today's video, we're building a financial model for Nvidia, focusing on scenario analysis. We'll dive into how you can use the choose function in Excel to model different economic and sales scenarios and see how they impact Nvidia's financials. Whether you're an investor, trader, or just curious about financial modeling, this video is for you. So let's jump in and start building a scenario analysis page where we can easily toggle between different assumptions and evaluate the impact on NVIDIA's performance. First, let's outline what we're building today. We'll have two categories of scenarios. The first one are economic scenarios. And the second one are going to be sales scenarios. Under economic scenarios, the key driver will be cost inflation. And on the sales scenarios, the key drivers are the sales price per unit, sales price per unit, and the second one is going to be sales volume growth. We will use the choose function in this video to link different scenarios to these key drivers. The choose function is perfect for this because it allows us to select from a list of options based on an index number, making it simple to toggle between the scenarios. So here's the plan. We'll create a drop-down menu, one for economic scenarios and one for the sales scenarios. And for each drop-down, we will list our scenarios as best, base, and worst case scenario. And the key drivers in the economic scenarios is going to be the cost inflation, which affects the expenses of Nvidia. And in the sales scenario, we will model sales price per unit and sales volume growth, which both directly impact revenue. So let's actually jump in and start building the scenario page. The first thing I am going to do is build a scenario switch with you together. The scenario switch is important in the model to switch between the base, best, and worst case, which we will build in a minute. So we will build an actual switch here. To do that, we will go here and enable this little icon, and then just like drop it over the little one here, and we will come back to this in a minute. Since the scenario page is in the future, or the numbers are projected for the future, we will only using the years we are projecting, in this case 2025, 2026, 2027, and 2028. And we will center them and put a line over here. Oh, that was under. Over. So the next thing is we're going to start building with the economic scenarios. I will make this bigger here and put in some lines. For cost inflation, we will have a little box up here, and of course we're gonna have our base case, best case, and worst case. This applies to the sales scenarios also. So I'm just going to copy the boxes down here for sales price per unit and one for sales volume growth. Oh. Right. And of course, here we also have the base, best, and worst case. With copy and paste, you can save yourself a lot of time. So I would always recommend you only do the boxes once and then you just copy it down. Make it look a little prettier. So that's the first step in building out the different scenarios. The next step we will do is build the choose function to get the values out of the base, best, and worst case. Before we can use the scenario switch, we should populate our scenario page with some numbers. I'm going to start out with the cost inflation, and inflation in the base case is expected to gradually return to the Federal Reserve's 2% target. For 2024, inflation could range between 2.5 and 3%, eventually stabilizing near 2% by 2025 to 2026, as economic pressure eases, supply chains improves, and interest rates are going down. So we're gonna assume that we have maybe 3% in 2025, and then let it go down to 2.5 in the following 2 years, and then we are at the inflation target of the Federal Reserve of 2% in 2028. That would be the base case. The best case, under favorable conditions, inflation could decline more rapidly, with some forecasts predicting it could dip below 2% as early as 2025, driven by weakened economy growth and effective monetary policy. So, in the best case, we are going to assume that we hit the inflation target of the Federal Reserve in 2025, and it will stay that way. So, we're going to assume it is 2% for the best case scenario. And for the worst case scenario, we could assume persistent supply chain disruptions, strong wage growth, or geopolitical tensions. Inflation could remain high, hovering above 3 to 4% over the next few years. So in the worst case, we assume that we are at 4% for 2025, and we keep this high level, and then we go gradually down in the following years. And I am going to make this in percent, and with that we have the cost inflation numbers done, and in the next step I can show you how the scenario switch works. So to use the scenario switch effectively, we are going to use the choose function in this model. Since my Excel is in German, it's a different one, but in English it's choose. And the first thing we have to reference the formula to is an index, which is the little number 1 we put under the switch here. So it's going to be D4. And since the index doesn't need to change, we will lock it with the F4, so it doesn't go anywhere. The next step is that we are referencing to the values we want to get. So we want the base case in one scenario, we want the best case in one scenario, and we want the worst case in one scenario. And that's it. That's already the formula we're gonna need. Copy it to the right and make it also in percent. And now I can show you how we edited the scenario switch. So to actually use the scenario switch, we need to edit it. So you make a right click with your mouse on it, and then you go into this little box, and then we're gonna put the cases in here, and the little one we have under the switch. So D4 is gonna get into this one, and then you will see this happen. Don't be afraid, it will always happen that you have no values at first. But then if you click on the scenario switch, you see that you can choose between the base case, best case, and worst case. And if we do so, if we choose the base case, you see that in the top box, it's pulling the values out of the base case. And to prove that this works, we're gonna change it to best case. As you see, the numbers have changed to the best case, and for the last one, we are taking the worst case. And the reason why this works is that the number under the scenario switch is changing as we are changing the cases. So base case is 1, best case is 2, and worst case is 3. And the only thing the choose option is doing is looking, okay, we are having the index up here, and if the index is 3, it's saying of these values, which one is the third. So this is the first, this is the second, so this is the third, so it's pulling the third value up here. If we change it to base case, it is the number 1. So the choose function is going to see reference the index is 1, which one is the first value, G11, so I'm going to pull this number. This is how the choose function works, and this is also how you can use the scenario switch, which is pretty practical, and it looks very nice on your model. Next step is to populate the sales scenarios with some numbers and put in the choose function so this works over the whole scenario page. So for the sales scenarios, I'm gonna assume some prices for the sales price per unit. I've looked up, for example, the RTX 4080 of Nvidia costs around $1,200 at the moment. So we're gonna say at the base case, it's maybe increasing a little bit year over year, 400, and in the best case, the prices are rapidly growing. And in the worst case, prices are staying the same or even going down in some years. So also here we can use the choose function to pull out the correct values in the different scenarios. copy that to the right and check it out if it works out. Best case and worst case seems fine to me. Next step, sales volume growth. For the sales volume growth, we're going to assume some pretty high numbers since Nvidia is growing rapidly at the moment. So we're going to say at the base case it's growing 20% in the next 2 years, and then it's slowing down a little bit, and in the best case it's growing even faster, and in the worst case it's grown not so much or even a little bit lower. So make this 1% again, and again the choose function, so we are pulling the correct numbers for each case. So now we have populated all the boxes in our scenario case. The last real step to do is to make it look presentable for the client. So I made it very presentable here. It's always important to keep your models presentable to clients. Don't put in the numbers and just forget about everything. Make it look pretty, make it look presentable, so that if a client asks you a question, you can just pull up the model and show it to him in the PDF format. In my case, I did the numbers blue, since these are assumptions. These are not like real values we calculated, it's just assumptions we made up. And yeah, that's it. We successfully built a scenario analysis page that let us toggle between different economic and sales scenarios using the choose function. And this model now gives us the flexibility to explore how different assumptions impact Nvidia's financial performance. Well, at least it will if we are going into the model. As we see, the scenario switch is working perfectly fine. It's pulling the correct numbers for every case here. And if you found this video helpful, don't forget to like and subscribe for more financial modeling and investing content. Drop a comment below if you have any questions or if there's anything else you would like to see. Thanks for watching, and I'll see you in the next video.